All right, I was doing some back testing again, and I came across this model, and this model was kind of complex at first, and I didn't really understand it. So I want to kind of break it down just a little bit. If we look at higher time frame context, we're within a market maker buy model. You know, we had a smart money reversal here. Sorry, ignore all these lines. I know it's kind of a lot. We have a smart money reversal here. We had displacement higher, pull back, and now we've created bullish imbalances. We're coming back down, and we're just rebalancing to this order block, and then we're coming back down, and we're using this bullish for value gap here in time as well again. So we come back into that. We zoom in to the 1 minute, like you should every single trade, and we now have uh, stacked highs here. We now have an original consolidation here. We come up. We fail to take this high. The thing to note here is that NQ has taken these highs here. NQ has taken these highs here, so it doesn't look as clean. But what do we know? We know that we are in bullish order flow on the higher time frame. We know that we're likely in this higher time frame market maker buy model. We're still respecting bullish PD rates, even though that we have taken those highs on NQ does not mean that we're gonna sell off. Think about what the higher time frame is doing. So higher time frame is bullish, and that will override your lower time frame SMT there. And then we come back down, and then now we come back down. We take a low here. We take here. I'm gonna delete this for a second. I'll put it back on. It's kind of confusing with this on right now. So we take a low here. Displacement higher. We create a fair value gap, but we're still respecting this SIBI. We don't break above it, and we don't show that big a displacement. I do like this wick here. I do like this here. But the reason why we engineer this, think about it. We're just engineering a short-term low here to then put in your intermediate-term low to then have another short-term low. So that's what that is. We come into that SIBI, or that BISI, sorry, higher time frame. We sweep this low, and then we get this big energetic displacement higher. We now know that we're gonna head here. We now know that we're likely gonna head here. And what I do want to point out here is that what time is this all occurring at? This all is occurring at 10 a.m. And why is that significant? 10 a.m. is when that 4-hour candle opens up. So a lot of the time you're gonna get open low high close, and that's just open low high close protocol. So what does this now becomes? This now becomes your wick on the 4-hour candle. Look at the 4-hour candle. Every 4-hour candle will have a wick. Ooh, do we not put? We created a devil's mark there. That's a devil's mark, which means we don't put a wick in on the candle. That's what a devil's mark is. So now this candle here becomes a projection that I can project because we know that smart money is involved within the wicks. That's what we know. We know smart money is active within the wicks. Look at where negative 2.5 lines up. Nice with buy side here. So that's just a little added confluence there. That's where I got that projection from. I projected that wick out. And notice it lines up nice with buy side. Or, hold up. Let me, did I do that right? Yeah, I did that right. Notice where we pretty much slow down just a little bit. We come up to that 2.5. And then we have a little bit of a reversal there. And then this other standard deviation projection that I got from this model was that first retracement leg. That first retracement leg, I've been backtesting this. That first retracement leg is also what you kind of want to refer to. And look at where high day got put in, or look at where this lines up nicely with. I mean, standard deviation isn't something to live and die by, but it's just something that can help you with added confluences, especially if you use that with swing grading. I feel like that is underrated to look for market maker models. So we have high resistance liquidity signature. We get displacement higher. We pull back, breaker, fair value gap. Yes, that gets respected. That could be an entry. We come down. We now have that stop rate. What are we looking for at 50%? At the 50% mark, we're looking for a stop rate. I don't even need to look. We take this high here, come back, stop rate, and these are kind of just like some difficult conditions here. We take a high, then we take a low to then go higher. So this now becomes your double purge. And then that's when we have that low resistance liquidity signature. We come back here, and we accumulate. So we know that we cannot go from a consolidation to a reversal. So we consolidate here. This is just AMD. AMD. distribution there. That becomes maybe a second model you could have partaken in, and then throughout the rest of the day, what are we reaching for? What are we spooling towards? Buy side right here, buy side right there. So yeah, this was kind of complex, kind of hard to understand. So like I feel like if I were live trading this, I might have got tripped up on this and caught up on this model. So I just wanted to bring that attention and add this to the journal.